we joined SaaStock a little while ago and are part of their founder circles. It's been absolutely brilliant for us. We first came into it to further our community, our reach, our network, and to learn from some of the world-class speakers that SaaStock has come and speak. And I have to say, it has been absolutely superb for us.
Welcome to the SaaS Revolution Show. Ophelia Brown, Managing Partner at Blossom Capital. Welcome, Ophelia.
Thank you for having me.
Yeah, great to have you on the podcast, which I think for the first time, and we were just saying before we started recording, I think it's been 2016 was the first and only time we met in person at the first ever SaaStock. So it's been a while. Lots happened since then, and yeah, but certainly great, as I said, to kind of follow your career and the creation of Blossom Capital, and the next time we will get to see each other in person since 2016 will be in October later this year as SaaStock returns to Dublin. So excited for that. And so obviously welcome to the podcast, and tell us a little bit about yourself, Ophelia. So maybe for listeners that don't know who you are, who is Ophelia Brown, as a person, and a little bit of background to yourself.
That could be a deep question, but I'll give the very short intro version. So I'm the founder of Blossom Capital. We're an early stage venture fund focusing on Europe. We're three partners, and we launched in 2018. We've raised about $1 billion since we started. We just announced our third fund at 500. And our square focus is Series A. So we're a bit unique versus other funds in that we only actually make 5 or 6 investments a year. And each of the three partners work alongside every company that we partner with. So we're really trying to maximize the success of those few teams that we think we can support the best, rather than kind of play the probabilities. We have about 17 companies in the portfolio now. They include some real breakouts like Checkout.com, which is recently valued at 40 billion, and MoonPay, which is a fiat crypto on-ramp, which was last valued around 3.5 billion. And so delighted to be back with you and be talking all things SaaS and early stage companies today.
Excellent. And what about, I mean, a bit of insight, why did you get into the VC world? Like, what was that appealed to you? And were you doing anything before? Was there some sort of, jump or pivot into it? Or did you know that you always wanted to be in the world of VC and investing in startups?
I actually always thought I wanted to be a founder. So I didn't know too much about the VC industry until I realized that I was never going to make it as an entrepreneur. So the first idea that I came up with was an idea for a peer-to-peer car sharing startup, and I was unfortunately beaten to market and couldn't quite find the second idea. And that's when I thought, well, if I'm on the investment side, I'll get a much better idea of the landscape and figure out what to work on next. I joined Index Ventures back in 2012, and the idea at the time was, I'd do kind of a couple of years there and then start my own thing. But I just fell in love with the investment side, realized that I was much better suited to enabling others who had ideas than trying to come up with the idea myself.
Is there like, I don't know, not necessarily like a private club, but just a group of managing partners, those that have founded investment firms that consider themselves to be entrepreneurs? Because I guess you've started a business, right?
Yeah, no, I think that's where I got kind of rising up through Index and then going on to Local Road. I realized the entrepreneurial streak was pretty strong and wanted to create something myself. So that's, yeah. Is there a club? I wish there was. I think there's certainly a new cohort. I'm no longer one of them, but as solo GPs, so individual VCs that have started funds, notably Nico Jason and Harry Stebbings with 20 VC. And I think they're more of a group, but yeah, it's becoming increasingly common, I'd say.
And what was it? I know you mentioned in terms of your path, and then founding Blossom, but why particularly Blossom and this sort of like direction? What was it that you wanted to achieve, with this fund?
Yeah, so I was fortunate to spend a lot of time on the West Coast in the early days of my venture career. I worked with some phenomenal companies like Robinhood, so really got to understand, how founders build world-class product and engineering teams, how they think about hyperscaling growth, and learn from the best investors over there. And but I never quite believed, the value mantra that only talent and ambition was confined to the West Coast, and have always been very passionate about helping European founders build companies that can compete on the global scale. And in my mind, helping founders do that really meant changing a lot of the investor mentality, the way that you provided capital support, expertise, network. I alluded to kind of our fund model earlier, which is, build funds around, 15 companies and be much more focused. So that was really the ambition, to kind of help create the next generation of world leading companies from Europe. So we launched, it was myself and Imran at the beginning in 2018, and then our partner Alex joined us from IVP, where he spent almost 7 years on the West Coast. So it's just the three of us today who will equally share that ambition.
And in terms of investment thesis, you mentioned Europe, you mentioned Series A only. What else is there? Anything, or in terms of, can you articulate further that investment thesis, if there's anything specific?
Yeah, I think probably like all great investors, we really are looking for those outlier businesses, businesses that will fundamentally disrupt, change, or even create new industries, and go on to create, billions of value ultimately. That definitely starts with the founding team, their mission, their purpose, and their drive. So, overarching, that's what we're looking for. I think in terms of how we approach it, that's kind of more where the differentiation comes in. While we look kind of generalist from the outset, each of the partners have their own very deep investment experience in certain themes and sectors. So I spend a lot of time thinking about financial services, fintech, crypto. My partner Alex on consumer, and Imran deep into technical infrastructure, cybersecurity, open source, etc. And that means that we can kind of cover a very broad remit in Europe, while all having the expertise on scaling, go-to-market, team building, etc.
And these are, so strange times, but interesting times in terms of the macroeconomic climate. It's a very unusual one, with war going on, inflation, tech stocks have, taken somewhat of a battering recently. A lot of talk about, sort of recession, or we're even, in a recession. So given the current sort of market climate, or downturn, as it were, what is your investment strategy sort of right now, or maybe, for 2022? Certainly for be helpful for the, founders that are listening, that are thinking about raising, obviously maybe the European Series A. But what is your investment strategy in this market?
So it actually hasn't changed. When we launched in 2018, we were almost 10 years into a bull run at that point. And we talked about investing. We had 6 kind of investment criteria. 2 of those I already alluded to in terms of market size and team. And the last one was investing in recession-proof businesses, which we slightly adapted to crisis-proof when COVID hit. But we always thought a lot about, how businesses perform when, enterprise spenders cut or consumer spend patterns change. And I think that, early stage entrepreneurs in many cases are somewhat protected by what's going on in the public markets, because their exit horizons are 7 to 10 years out, and so the correction in the macro today doesn't affect them in the immediate term, and you don't know what kind of environment you're going to be exiting into. And in some ways almost creates opportunity. Like if you think in terms of the last financial crisis, how many great companies, Airbnb kind of case in point, were created because of economic dislocation. And so, we carry on investing in this time actually with great excitement in terms of the opportunities that might be open to new founders today. We've always believed in appropriately capitalizing companies. So whenever we fund for 24 months after our investment, knowing that, no path is ever up and to the right. And you want founders to feel like they have the flexibility and freedom without the constraints, real, like very burning constraints of burn earlier on. But we also always guide our founders to capital efficient growth, because that's the only way that you can be in control of your own destiny. And so in terms of what we look for and the advice we give, it hasn't really changed at all. It's just do more of the same.
Let's jump on that a little bit. So like recently we've seen, and I don't think necessarily it kicks it off, but the Sequoia memo, and they're very good at their kind of memos to their portfolio companies. We're obviously seeing about rhetoric about being capital efficient, maximizing your efficiency, doing more with less. You mentioned that's kind of pretty much always been the advice that you give for founders that are looking to raise in this market. Maybe you said like earlier, obviously like early stage sort of companies, potentially they're not too affected by what's happening in the public markets. But if they're looking to raise, is it going to be any harder for them? And that's got, I guess, first sort of question. But what is your advice to them in general, kind of raising sort of like right now?
Yeah, I think it definitely depends what stage you're at. So I think early stage is probably easier. As I mentioned, investors are still hopeful that there's the next opportunity around the corner, whereas at later stage, you're getting closer to those public comps mattering, and the macro environment really affecting your growth over the next couple of years. And I think why it particularly matters at the moment is that there's just a lot of uncertainty. People are finding it very hard to predict what kind of position that we're going to be in 6 to 12 months from now. So I think my first advice to founders would be to take a good look at your fundamentals, and to really understand. I think there's a lot of great data out there, and obviously if anyone wants to get in touch and ask for data, happy to share. But in terms of how your metrics look, whether you span on great, good, or okay, because I think there's going to be a kind of bifurcation of where capital goes. There's a real flight to quality in these times, that people are looking for that side of great, where you've got your burn multiple in place, you can show good payback, can still exhibit good growth. So I think the first step is for founders to kind of truly admit to themselves where they stand in those buckets, and how fast or how quickly they can, if they're not on the great side, get to that point. And I think that in any investor conversation, you kind of want to definitely be realistic in terms of your goals, but also honest in terms of what you've achieved. And so I think if there are reasons why certain metrics or KPIs are lagging, you should address those kind of upfront in the conversation, because I think that this is the time when investors really go through the data, do their DD on how the company's growing to date and forecast, etc. So I think that's like the first piece of advice that I would give.
And kind of looping back to you said that I think Blossom Capital's and yours advice to your current portfolio or your portfolio companies is always around capital efficiency. Sort of diving into that, could you elaborate a little bit more on that for the listeners and viewers, into what sort of things that they could be doing, and any other advice aside from capital efficiency that you're giving to your companies kind of right now?
Yeah, so on capital efficiency, I think, if you talk about SaaS businesses, it's like the payback on sales and marketing spend, and it's looking at your burn multiple, it's looking at your cost of service. So, how you think about driving revenue expansion in the business, what it takes to keep a customer running, etc. And all of those great metrics are, we've written kind of on what great looks like there. The other ones are, if you are burning too much and you can't extend your runway through to 24 months from here at least, starting to have to make some really tough decisions. If you have a significant portion in the team in non-revenue generating roles, how do you think about those and how do they contribute to your growth? Because that's a cost basis that an investor is definitely going to be analyzing. And then I think, for those that require some thinking out the box, this is the time to really kind of take a step back and kind of reassess where the business is going, to really think like, where is the opportunity in this market? What are we driving towards? And have we positioned ourselves for this next turn? So I think those are the main things that we're talking to our founders about.
Do you think, I think this is kind of based on a conversation I was having earlier this week, and I've seen some SaaS companies, and maybe it is those, the public companies that have taken obviously the battering, in their stock prices, and maybe some of the private ones in the early stage, not so affected. But we've also seen Salesforce, I think yesterday or today, kind of report a great kind of quarter, great kind of earnings. I think their stock price has gone up, and they're I think commenting that actually they're not seeing, there's no effects in the current market on their business, and they're showing that. We're seeing some on the e-commerce side, like I think what we're seeing in like Klarna and some other sort of businesses, and the Amazon kind of roll up sort of like companies really being affected. So do you think it's fair to say, or is it fair to say that SaaS, it might be better placed in other industries, kind of during like downturns and recessions than, let's say, e-commerce?
I think if we go into a recession, there's obviously likely a slowdown in consumer spend, and that will hit e-commerce. If it's hard to say, how much budgetary spends will affect Salesforce, but certainly across our enterprise SaaS portfolio, we haven't seen any slowdown in terms of customer demand. So it's just not hitting there yet, despite kind of the fears that we're about to see a big slowdown in spend there. I think what you're talking about is two very different profiles of businesses in terms of profitability and path to profitability. And I think one of the things that unfortunately hit Klarna, and that's why they announced the layoffs, is that they were already burning a huge amount last year, and obviously that had kept up in this year, and that was forcing them out to a fundraise in a very different macro environment. Whereas I'd say Salesforce, as you said, posted exceptional results, and there's definitely been, and you can see this in the public markets, a bifurcation in performance between profitable tech and non-profitable tech. And I think that's probably a slightly more relevant to the two models at the moment versus ecom versus SaaS.
Makes sense. No, good thoughts on that there. And we, as we mentioned in the beginning, you're coming back to Dublin, which we're excited about for SaaStock 22 this October, and you'll be on stage with Eleanor Crespo, who's the CEO and co-founder of Pigment. Can you share the story of how you invested in Pigment, giving us a little bit of details of how that came to be? What's the story there?
Absolutely. So Eleanor and Romain, her co-founder, who was previously the CTO and co-founder of Criteo, and Eleanor was an alumnus of Index, which is where I was before. Index were one of Criteo's largest shareholders, so there was like long kind of links between us. I had known the two founders for a while, and converged when we were actually looking at various opportunities for the replacement of Excel. It was clearly a theme that a lot of founders were looking to explore, and it was just when Airtable was getting going, and so you had kind of the disruption on that side with Excel being kind of a system of record data entry, and then there was the other side, which is much more about the modeling, the formulas, the calculations, etc. And so we were looking for a company to invest into in that space. We must have met with like 50. And it was just around the time when Eleanor and Romain were getting going. We thought they definitely were the furthest along in terms of being able to think about the product from first principles, really understanding the end users and customer in terms of how they would be using this tool, the dynamics of the fact that they needed continuous information flow into their modeling. They were using other tools. They didn't necessarily want to be bogged down by the Excel formulas, but something much more easy to use and in the language that they would actually understand from a business day to day. And so when they kind of walked us through the product roadmap and the direction that they wanted to take, it was just obvious that they had exactly in mind what the user needed. And given Romain's kind of technical capabilities and his experience and what he'd already built, it seemed like a no-brainer in terms of that he would be able to build the team and execute against this vision. So it was actually peak lockdown, May 2020. We found ourselves in a bit of a competitive position to lead their Series A. and managed to figure out a way to get from London to Paris to go and convince them to sign our term sheet back then. But we've been, absolutely delighted to be partnered with them. The growth has been pretty exceptional. Their customers include the likes of Gong, Carter, Brex in the US, Mano over here. And the team is on a great trajectory. There are about 100 people today. And they just raised a $75 million Series B from Green Oaks.
Amazing. Yeah, well, we're looking forward to your talk with Eleanor at SaaStock in Dublin. Probably a little bit too early to say what you're going to be talking about, unless you've already spoken about what you're going to talk about.
Let's hope we're all talking about a great public market environment and how we're all unnecessarily worrying about a recession 3 months ago.
Yeah. Well, do you know? So an entrepreneur friend of mine who's in PR. She was talking about this, perhaps being a self-fulfilling prophecy, that we're kind of talking ourselves into a recession. Like nobody knows what's going to happen, and we're just kind of talking ourselves into it. But hopefully, as you say, in October, things will be much better, and certainly we'll be having a lot of fun either way in Dublin. And speaking of which, obviously I know I know some facts about you now, a few more, but I do know that you've been to Dublin in 2016. Have you been any other times? Like, how many times have you been to Dublin?
I've probably been quite a number of times. So we led an investment into a company called Tynes back in 2019. So Tynes is a security automation product built by two founders who used to work together for 15 years, Deloitte, PayPal, DocuSign, Owen and Tom, who then started Tynes in late 2018. We led their Series A that summer, and pre-lockdown would be back probably once a month or something to spend time with them. Have been back a number of times post-COVID, so know the city pretty well.
Good. So you're a Dublin, I don't know, is a veteran or OG or whatever you.
I wouldn't claim enough there, but.
Well, what is your for those that are coming to SaaStock in Dublin, maybe haven't been before? What's the Ophelia Brown tip? The one thing that they must do, or what's your favourite thing to do when you're in Dublin?
You've definitely got to bring an umbrella because it's always raining when I land.
It's not true. Well, never at SaaStock time. It's always sunny. It's always sunny in October.
We'll see.
Any other tips? Is there anything specifically? A pint of Guinness at Grogan's?
Obviously the pint of Guinness, but that one seemed too obvious.
No, I like definitely Grogan's and like the Long Haul. There's certainly so many good pubs there as well. But it's going to be a lot of fun. We're doing actually an investor day on the Monday at the Aviva Stadium. So if any investors who are big rugby fans, that'll be good fun as well on the Monday the 17th. So lots of different things happening that week. But as we say, very much looking forward to that. A couple of final questions, Ophelia, for yourself, like personally, how do you stay healthy and sane? As you kind of run the business and travel the world and invest in companies. You don't.
It's easy.
So unhealthy and insane is
definitely
how you live.
Insane, slightly healthy. I love to run. That's probably great. Where one sanity point, getting it all out on a good run.
Good stuff. And where can people find you online? They got any questions from the podcast? They just want to reach out, or they're a killer Series A, sort of company. How do they get in touch?
OpheliaBlossomCap.com is the easiest way.
Cool. Awesome. Well, thanks so much, Ophelia, for being guest on the SaaS Revolution show today, and speaking to the SaaStock community. Like we said many times, I think looking forward to seeing you in person in Dublin this October. So thank you so much, Ophelia Brown, Managing Partner at Blossom Capital.
Thank you. See you soon.